Hello, Foxy friends. It's 4:03 Mountain Time, which means it's time to rock. Another fun episode of ShapeShift Tokenomics. Thank you, Lo-Fi Grill, as always. Hope everybody's doing well. We just had a great TMDC chat, and it's a beautiful summer day. So there's this fun little meme in crypto, basically saying that the next 24 hours are crucial, and it's kind of a goofy meme and a bit of a hollow saying because there's always some crucial thing going on. It always feels like the near term is pivotal, but I'm gonna use that right now and actually mean it. I feel like the next 24 hours are crucial to the short-term fortunes of crypto and Fox in general, because tomorrow we get another round of the CPI data that completely destroyed the market last month when it came in higher than expected. So this is the core price index, the CPI, that'll be released tomorrow morning. This month I think they're expecting inflation of 8.8%. So the key thing to watch here and what the markets will be reacting to is the actual number in line with those expectations, or does it print higher like it did last month? If it prints higher, then I think things will nuke pretty bad, because there's already starting to be a bit of a sense that, well, okay, oil's come off its highs, and maybe there's like some preliminary indications that inflation is chilling a bit. But if there's no signs of that in the data, then the market will price in more interest rate increases. Definitely probably another 75 bips at the next meeting, and maybe even for the following. So in the short term, a lot potentially does rest on that. Conversely, if the number comes in better than expected, like lower than expected, and it looks like, well, wow, the Fed, along with maybe this sort of nascent recession we appear to be entering, is actually causing prices to drop, then people would start to have a more dovish outlook in terms of the Fed, and think, well, maybe we won't be entering like this long-term tightening cycle, in which case we could get a real rally in crypto prices. And in either case, I think it's good to be prepared for either eventuality, and get ready for like another exciting day in crypto. But separate from all that, I think the long-term fundamentals are amazing for crypto's widespread adoption. It's going to be ready to scale to the masses, increasingly so. We'll talk about that on this chat. So yeah, a quick little summary of the agenda here. We have some governance updates. We have runway update. I've been doing some research. I put on my research hat this week, and I've been digging into Arbitrum, which is one of the Ethereum scaling solutions, a rollup to be specific. And then we also have Lucas from Prime DAO, who's going to tell us about what's going on with that project and how it relates to ShapeShift. But first, I'm going to kick it off with the runway. I'll post the spreadsheet here. This is updated as of today. Again, these are projections, but they are projections based on data we have. So the latest and greatest is in terms of our current stablecoins. That's where we're at as of today per the dashboard. So an important update here is the 384 for July. You see that for our monthly budget. This is not a projection. That actually is how it all shook out for July, and it was substantially less than kind of what was initially anticipated. So this is kind of the result of workstream leaders making the individual choice and the difficult choice to reduce budget quickly. Some of this was a matter of proposals, or I should say, approved for proposals ending their time period, and new ones being created. Anyway, this actually is closer to sort of what the following month will probably be. So looking at where we're at now with these projections, we have 11 months of runway extending into May of 23. The biggest assumption here, or I shouldn't say biggest assumption, but one variable that will be modified within the next few weeks is the subsequent monthly budget. So this is where there's kind of a little bit up in the air right now in terms of how these different proposals shake out and how they impact workstream spending. My best estimate, based on what workstream leaders have told me, is that we're going to be coming in at about 353 for monthly spend on contributor salaries, and that's just in USDC. Additionally, I'm assuming about 5% of that amount will be taken in boosted Fox. This seems like a very realistic expectation based on the fact that in June we had 5% of contributor salaries going towards boosted Fox, and then 6% this month, per some updated figures Willie just provided today. So that's kind of the general lay of the land right now. We are earning an average of maybe about 180 per month via our ETH to US or Fox to USDC Olympus bonds. Of course, that's nothing we count on here for these projections, and we don't factor those in. But it does, obviously, if that were to continue, that would be helpful, helping to offset some of these debt service costs on the right here, and of course, just extending that runway. So that's where we're at. The TLDR here is, we're already seeing a very a runway lengthening effect by virtue of the various budget cuts that have been made. Hunt, laser eyes. I don't know. I've seen some people who are just maintaining the laser eyes throughout the whole bear market, and then they can. I think that's a cool approach, because then once the bull market comes again, whatever that is, they can just be like, "Hey, man, I knew it the whole time. That's why I kept my laser eyes." Yeah, I know John's got him on until 100K. Bitcoin could drop to 3K, and John would still have those laser eyes. Also on the agenda, a couple quick governance updates. There are 3 tokenomics-related governance things to talk about here. One is the Yieldies proposal passed. There's not much else to talk about here except for the fact that Yieldies itself, the smart contracts, are still being finalized with respect to the various audits that have come in around those. Super important that we get that code right. So that's being handled in the background. No further budgetary outlay will be necessary for this. We also have the proposal to extend tokenomics into fund tokenomics into Q3 and Q4. I just took that live earlier today. That is live on chain, so give that a look and a vote. And then we also have the proposal coming soon that Professor McCarthy has built out for the next TMDC allocation. You might remember that every time, basically TMDC only can work with Fox because of these proposals that say where the community grants the TMDC the ability to do XYZ, to do things with a XYZ Fox, basically. So that's what's going on there. I kind of hauled ass through that because we have some other stuff to talk about. But before we jump into the next topic, any quick questions on those first things or thoughts? I see Chris Farley on the stage. If this bear market continues, we're all going to be living in a van down by the river. Cool. So, all right, yeah, let's move on to the Prime DAO stuff. So just some really quick context on this, guys. Prime DAO is one of the sort of emerging verticals in crypto, which I think is really exciting, where they're building tools with DAOs in mind. And what they're doing specifically kind of speaks to our interest potentially in terms of wanting to diversify our treasury, namely swapping our DAO token, Fox, for the tokens of other DAOs. They've created some interesting approaches there. So we have Lucas from their team who's going to join us today and kind of talk through this. He'll be able to answer your questions, and they're also working on kind of a tentative sort of framework for how, what that might look like if ShapeShift were to participate. Lucas, I'll get you invited up here on stage. Hey, welcome.
Hello, can you hear me?
Sure can.
Hey guys.
Yeah, thanks for joining us.
Yeah, for sure. This is the first time I'm using Discord stages.
Yeah, we use it every day. It takes a little bit of getting used to, but I think it's actually it works pretty well in terms of the flow.
Yeah, it reminds me a lot of Clubhouse. Looks good.
Yeah, yeah, that's a good analogy. Um, so yeah, I think like one way to sort of make good use of this time is just if you could provide of course you talked to us in the TMDC, but if you could just provide the community at large with maybe just a quick overview of Prime, and then also how you see Shapeshift benefiting from what you guys are building.
Yeah, absolutely. And thanks for having me here. I think so. A good way to start is just describing what we do in general, and then specifically the tool Prime deals that we're suggesting you guys use. So in general, Prime is a DAO. We've created a suite of tools that the idea of which is to take DAOs from kind of like nascency slash launching to maturity where they would be needing to do deals with each other, or in the future, acquisition type deals where maybe they would be, taking over another DAO's token. So the first project we have is token launches with Prime Launch. We also have a ratings product where experts are rewarded to submit reviews on various DAO's protocols or products. Prime Pools, which is a balancer optimizer, and then Deals, which I work with, which is helping making DAO to DAO coordination more efficient. So the first function that we've created in Prime Deals is a very user-friendly platform for token swaps with joint venture and co-liquidity pools down the line. So those are the next things that Prime Deals will work on. And yeah, so what we've been talking about in terms of Shapeshift with you and Willie, we think that you guys would be a great candidate to submit an open proposal and start soliciting other DAOs that you might want to potentially swap with. Personally, I think there are some exciting possibilities with discoverability, increasing, eyeballs on Shapeshift and sourcing new partners that you guys might want to, interact with. But happy to answer any questions about that anybody might have.
Yeah, the discoverability aspect we think is interesting, especially like I think a lot of us here are quite bullish on DAOs in general and are expecting potentially a Cambrian explosion in DAOs in the 6 to 12 months. Discoverability right now is kind of like, well, we could individually approach different DAOs, and we have actually. So there's that, and the universe of DAOs is not super big yet, but over time, like that discoverability element seems pretty powerful. It seems to me that one sort of challenge you guys face, and something that will need to happen, is kind of just getting that network effect started, making sure you get that critical mass of other DAOs involved. I think we may have touched on this in our prior chat last week, but how are you guys sort of how do you guys aim to incentivize more DAOs to get involved and build out that network effect and that sort of quote marketplace of DAO offers?
Yeah, so one analogy, I forget who made this in our previous conversation last week, but one analogy that somebody had was it will almost look more like a bulletin board. So if a DAO is perhaps smaller, wants to solicit support slash pitch to you guys like, oh, here's what we're doing, here's how you can sort of like, participate in the upside of this, and get connected with us, they can go on, find like the best partners to pitch to. And then, these DAOs have open proposals. They are looking for partners. And then the solicitor would go on and say, oh, okay, this looks like it'd be a good partner. Let me submit a like offer proposal. So like you guys would have the open proposal, they would have the offer. So then they would submit an offer to you, and you could quickly have like a lot of, you could have submissions of people who want to partner with you. So it kind of automates that process of like trying to figure out who's looking versus who's not interested in doing a deal right now. Um, we're planning on getting that going basically just by spreading the word, getting an ad out there, and getting some of the best DAOs to use the platform, such as Shapeshift, and going from there, trying to snowball it into smaller DAOs and DAOs who are looking to partner with mission aligned organizations, and getting starting to get some people to just put the word out that like, hey, we're open to, you submitting a deal. And then those DAOs who are looking to do deals submitting counteroffers.
Very cool. One question that just came up during the chat is, the TMDC chat we had prior to this is, correct me if I'm wrong, you guys are sort of envisioning like or charging a blanket fee of like 0.3% on all deals that are consummated through the platform?
Yeah. Yeah.
Okay. And then of half that, does half of that fee go back to the and I can't remember the term you guys use, the leader or the creator of the proposal?
Yeah, so the proposal lead is just one wallet out of however many representatives are signed up. And that could be the DAO's wallet, that could be a DAO representative's wallet. And if they wanted that to go back to the DAO, they could do that.
Okay. So the effective fee for the DAO, because in this case, I think it would, most certainly be like a, our Gnosis Safe wallet. The effective fee would be 0.15% because
Yeah.
we have,
In
okay.
case you wanted to send those rewards back to yourselves, that's accurate.
Okay. And then on top of that, the D2D token is given as a reward as well.
Mm-hmm. D2D is Prime's token, stands for DAO to DAO.
Okay, cool. Another question that came up: how do you guys intend on moderating the marketplace or the bulletin board? Imagine eventually, especially if maybe you guys really got some serious traction, there could be sort of bogus offers or just I imagine this is a permissionless environment, but is there kind of a role for moderation there as well and keeping it kind of clean and focused?
I'm not the best person to ask about that. I can share what I think about that, but not speaking for Prime as an organization, because I'm more on the side of like getting as many people on there as possible. But personally, I think it's in the beginning, it'll sort of be like buyer beware, the DAO that creates a proposal will probably just have to do a bit of rudimentary due diligence on whoever's, offering them. But yeah, I think potentially down the line we'll think about moderation, but I don't quote me on that.
Okay, thanks for the answer. And where should somebody go if they want to get a sense of the tokenomics of D2D?
Great question. You can probably the best place would be to take a look at Prime's website. I will find something specifically about tokenomics and then put it in the chat. But the main website is just prime.xyz.
Okay, perfect.
But I'll look for a more specific link and send it in a few minutes.
Great, thanks. And then in terms of that sort of initial proposal you guys were building out, let's see, I feel like it might be a little bit too granular to talk through in this meeting, like the whole thing. We'll put that in front of the TMDC for sure. But I guess if you wanted to talk about that at like a high level and sort of what exactly you guys have built out for that framework.
Yeah, absolutely. So we're working on a generalized template for if somebody wanted to just submit a very like, generic open proposal just to test the waters, see who's out there. It would consist mostly of, a few parameters that you'd have to plug in, and then most of it is more like why type stuff. So you would basically explain qualitatively what you hope to accomplish from a deal, maybe like the reasons why Shapeshift would be looking for a swap, what you want to get out of it, and that would be totally up to you guys. It's more just putting the ideas out there. The actual settings and parameters you would have to plug in are pretty simple. Basically, all the wallets involved for the representatives and the proposal lead, whether or not the deal is public or private. Obviously, we recommend public for most DAOs, but in case you wanted it to be private until it was approved or something like that, for various reasons, you can make it public or private. Token addresses, total amount, and then there's a vesting period and a funding period that is really just about timing. And that's pretty much it. So
Awesome.
we're working on a template for that. I think we shared it with you specifically, but can absolutely share that with anyone else who wants to take a look.
Perfect. Yeah, appreciate the overview on that. Let's see. We've been chatting in Telegram. If anybody has any questions here in Discord, though, it looks like you're here in the community. Were you able to jump into the public tokenomics channel?
I caught the last bit of it, but not the full thing.
Or oh, okay, that was our meeting. We have the channel as well. I'm just want to make sure if anybody else in the community has questions, they can ping you.
Oh,
But that shouldn't
yeah,
be a problem.
feel free to message me. I think my DMs are open.
Perfect.
But yeah, I'll make a quick post in the tokenomics channel.
Awesome. Yeah, glad we were able to work this out. I know some of your team is probably sleeping right now, so it's always nice when you have a distributed DAO.
Yeah, we color on that. Prime is based in Germany/Turkey primarily. I'm in Austin, Texas. Shout out to anybody in the US/Texas.
Nice.
All
All
right.
right. Any quick questions in the stage for Lucas?
All right.
Cool.
I see.
Well, thanks again for stopping by. I really appreciate it. And yeah, looking forward to digging in more.
All right. Thanks so much, Ken. Appreciate it.
All right. Take care. See ya.
Hey guys,
Oh, hey, man. How's it going?
so everything is fine. So my name is Machuche, and I'm also from Prime. I work with Lucas as well. Just to add on what Lucas said, in terms of what you asked with like how DAOs would know which DAO to work with and if this DAO is actually up to par. We actually have Prime ratings where we have independent raters rate different DAOs and different protocols independently and unbiased. So in that case, like ShapeShift or any other DAO that would probably want to collaborate with another DAO, that could hop on Prime Rating as well and see what the other DAO is about and what they do, and just a quick overview. Also, as for your question, I think it was with filtering DAOs and different projects, because definitely DAOs about to boom up soon. I think we are working on a conviction framework that are basically be like let's say a project applies for a grant, and we're working on something like sending a signal to all the stakeholders of the grant. Let's say if it's a DeFi protocol or if it's a refi protocol, refi DAO, then it applies to, let's say, climate collective. It could be a signal sent to all the relevant stakeholders, and once the signal is sent, then it gets approved. Then everyone says they're going to be investing in the project. Then Prime Rating comes in and does due diligence with the reports and the reviews, and the relevant stakeholders, let's say the DAOs or the investors, want to invest, then they can proceed from there. I'm not sure if that makes sense, but it's still a framework that we're working on and set to be released soon, but just to put it out there.
Cool. So that's what kind of where those ratings come in. I remember you guys mentioning that. That seems like a good approach. Firebomb in the chat says he's wondering how are independent reviewers chosen? Great questions here. Is there a mechanism or incentive to avoid Sybil attacks in your review system?
So basically, we actually encourage anyone and everyone to rate independently. So there's actually a panel of governors that actually review the reports to make sure they're actually up to par and there are no actually mistakes done. So let's say the stage is like, I review it, then there's a set of reviewers who review it, who have a certain threshold of we call rating experience points. So once they review it, it then goes to governance, where the governor makes sure it passes or not. So in that way, it's like a thorough process to make sure the report is up to par, so there are no like mistakes or misinformation and things like that.
Cool. Thanks for clarifying that. And then, yeah, guys, if you're following along in the chat, we have the link to the raters. Also, Lucas has posted the tokenomics. I'll repost that as well. Always good to give that a look. Cool. Any other questions from you guys, you crazy foxes? All
I
right,
mean,
and
just to
right
put
on
it out
time.
there as well. Sorry, just to put it out there as well. We have our office hours in the Discord tomorrow where we actually talk about Prime launch and how different projects and different DAOs could potentially launch and get a token and ways to do it. So you guys are more than welcome to hop on our office hours tomorrow. I think it will be at 5 p.m. I mean 4 p.m. CT. So you guys are welcome.
And Muchacha, is that a weekly thing you guys do, or is it kind of a one-off?
It's a bi-weekly thing. So we have bi-weekly office hours where we talk about different products to buy different updates. So this week it's Prime launch, and then next 2 weeks will probably be another product, maybe Prime deals or Prime rating.
Awesome. So yeah, everybody, lots of supporting content and collateral and information about Prime to dig into if you're interested. We also have representatives from Prime here to answer your questions. And of course, us on the TMDC will be digging in more as well. But Machuche and Lucas, again, really appreciate you guys stopping by today. Thank you.
Awesome, man.
Thanks for having us, Ken, and happy Prime Day.
Yeah, happy Prime Day to you too.
You guys.
See ya. Awesome. It's always cool to have other DAOs join us and talk about what they're doing. Just couldn't be more bullish on DAOs. It's going to change the damn world. So to conclude things, I'm going to direct your attention over to Zoom. If you could jump in there, because I'm going to do a screen share here. So if you could just bounce over there if you want, and we're going to dig in shortly on that. Bump, 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 ba-dum, ba-dum, bump, bump, bound, chicka, bound, 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 wah, wah. I feel like we need some sort of transition music here. Psychedelic has shared the link. Thanks for creating the Zoom, guys. I woke up this morning with Huey Lewis and the news stuck in my head, and I don't know why, but it reminded me of that scene in American Psycho when he's talking about Huey Lewis and then he kills the dude. I don't know how that popped in my head, but anyway. Okay, can everybody see my screen here in the Zoom? Awesome, thank you, Psychedelic. Okay, so here's let me just quickly frame all this, and I'm super excited to talk about this. So scaling has been one of my like long-standing passions and areas of interest in crypto. Prior to taking this role as a tokenomics workstream leader at centralized ShapeShift, I was head of R&D, and one of my core focus areas was scaling, like trying to look at the question of how our blockchain is going to scale, and then building on that, what does that mean for ShapeShift? So of course now ShapeShift is a different organization, it's decentralized, but this question of scalability is still, I think, very important for the helping position ShapeShift and could inform the things we build and the products we build, sort of assessing where things are headed. So what I decided to do is look at rollups specifically. They're a type of scaling solution on Ethereum. And then kind of over the next few weeks, we're going to look at different varieties of rollups and kind of talk through these things because there's a lot of complexity. But I'm doing this in order to kind of sort of update myself on what's going on. Like the last time I dug into this, the tech wasn't as built out and it wasn't really adopted yet. And now we're seeing adoption, as we'll see shortly. And also to like give you guys a heads up, just to educate everybody on where things are headed. So Arbitrum will be our first sort of thing to dig into. But what are rollups anyway? So I'm going to keep this very high level and breezy because it can get really technical, and we don't have that much time to go down that rabbit hole. But essentially, rollups are scaling solutions built on Ethereum, where you take all the basically all the execution, the transactions, the execution that normally would occur on the Ethereum mainnet. You take that onto a different chain, and if you just left it at that, you'd be basically wind up with like a side chain, like Polygon or something. If you take that sort of approach and say, well, okay, you have like a set of validators, and then it's easy to like move things back and forth between Ethereum. That's like your side chain. The problem with that is, even though it's scaling very well in terms of allowing for cheap and fast transactions. It's only as secure as that validator set. So rollups posit a way where you're taking that execution load off in order to off the mainnet in order to have cheaper and faster transactions. But this is a crucial part. You can actually use Ethereum you can rely on Ethereum for security. So they're scalable, but also as secure as the Ethereum mainnet, assuming they're properly decentralized and built properly. The way that happens is basically, and this is where the name rollup comes in. You can take a bunch of transactions that occur off chain, you roll those up together, you batch them up, and then you post the data, like the kind of like a compression, basically a batch of all that stuff onto the main chain. So the important thing about that is there's evidence of everything that happened. Independent observers can watch what happened and then challenge things if something erroneous happens on off chain. It gets a little complex again, but that's kind of basically the key understanding you need to have here is it allows for scalability while also being secure, because Ethereum mainnet is highly secure. And, ideally, and I think this is, kind of something that will get better over time, is like decentralized. Those three things, we talk about the scalability trilemma. Those things are highly desirable. And up until the point of rollups, it's been difficult to have all these. So, with that in mind, this is my thesis. This is how I see things shaping up, because this is really powerful technology. The ability to deliver on that scalability trilemma it's really hard to overstate its importance. So I believe that rollups will gradually and then rapidly, ultimately, siphon off activity from the ETH mainnet. So this is not some controversial, crazy thing. I think this is like the way rollups are being designed. Ethereum mainnet, we don't think of it right now as being expensive because we're in this shitty bear market, but you'll remember from just a few months ago, things can get very expensive, especially with like complex smart contract interactions and doing all this different stuff in DeFi and who knows, what other use case you want to employ. The ETH mainnet has some serious like scalability limitations. So I think it's likely that over time, only like a small percentage of transactions will happen, amongst for actual users, individual users on ETH mainnet. And instead, the mainnet will actually be used more so for posting these batches, like data availability. Basically, rollups will be amongst the biggest users gas-wise of the mainnet. And that, again, that's kind of like it, this is sort of the general roadmap. I think that it's likely that this will take place unless rollups turn out not to work, which is unlikely. The second thesis, though, I think, this could be a little bit more open to debate, but I feel pretty strongly about this. During the next bull cycle, transaction volume and liquidity on rollups will grow much faster than ETH sidechains like Polygon and Alt L1s. I'm sorry, Alt L1 EVM-based chains. That would be things like Near and Avalanche, Phantom. Specifically, the reason I feel strongly about this is just the simple fact that rollups provide that security element. Ethereum offers better security than a sidechain like Polygon. And I'm not dismissing Polygon at all. They've had incredible traction, and they could succeed in their own right. And of course, I'm not a maxi either. For sure, Avalanche and Near and those other things have a place as well. But you can't argue that they're as secure as Ethereum. So I feel like that ability to be decentralized, scalable, and secure is going to lead to more and more liquidity and transaction and users on these rollups. Again, it's a little bit, you don't pay as much attention to it right now because gas prices are so low. But this will change once we hit the next market. So thanks for hanging with me so far. This isn't like a super long presentation, but I think it's there's some compelling stuff here. So okay, where are rollups at? So this is from a site called L2Beat. This is a really good way to get your head around what's happening in the L2 world. So L2 is sort of a broad definition. It really kind of means like basically anything that's using Ethereum or any scalability solution that's using Ethereum for security. This could also be state channels, which is kind of more similar to like Lightning. They're not as common these days, but that would be a subset of L2s. But again, the vast majority of what's happening on L2s currently is rollups. So they tend to be a little bit synonymous. But this is a chart of ETH locked in L2s over the past year. And, you can see that even in this bear market, this is not really having a huge impact on people putting ETH in the rollups. And you see a big increase over, where we were just a couple $100,000 worth just, a year ago. So currently we're about 3.68 million or billion. I'm sorry. So, okay. What comprises that data set? If you just look here, we see a list of the various L2s, the biggest ones. So right off the bat, here's Arbitrum at nearly 2 billion TVL, and then Optimism. So both of those are what's called optimistic rollups. And then you have DYDX, who interestingly, they just made the decision to pivot over to Cosmos, which is a whole other interesting conversation. And then you have some other ones, including like ZK Sync and Immutable. But that's kind of the lay of the land. So looking at this, it's a logical choice to kind of dig in more and be like, okay, so what is Arbitrum? How does it work? How does it differ from other things? And what kind of adoption does it have yet so far? So again, you see a pretty good chart in terms of ETH locked for Arbitrum. It's done pretty well. It had a first mover advantage over Optimism and other solutions. The team is pretty solid. If you listen to these guys on podcasts like Bankless, they're sort of like cypherpunk OGs. They really know their shit. And they also, to their credit and to the credit of a lot of roll-up teams, they didn't want to make any easy trade-offs, trading off decentralization for scaling. They really are aiming to have both, which is a very sort of like noble but difficult goal. So just before the next slide, just very quickly, you guys may have heard about like optimistic rollups and ZK rollups. These are the two main variants of rollups. Optimistic rollups, of which Arbitrum is a subset. Arbitrum and Optimism are optimistic rollups. These, when I remember, I talked about those things you post to the batches you post to the main net. Optimistic rollups rely on something called fraud proofs, basically game theory, where they assume that everything is cool, so that the chain will just keep moving, functioning as normal. They assume everything is great, hence the name optimistic, unless somebody comes in and challenges this whole thing. They say, hey, well, actually, this transaction or this batch is inaccurate. And basically that relies on game theory. ZK rollups use super advanced math called ZK proofs, or zero knowledge proofs, to prove that something went wrong on the chain. So on one hand, you have optimistic rollups using game theory. On the other hand, you have ZK rollups using advanced math. And they each kind of have their own set of trade-offs that I'll probably dig into more like on a future call here. Okay. And this is where it gets pretty compelling. So, kind of the next question is like, who exactly is using Arbitrum? And, you see some very familiar names here. This is like, kind of a list of some of the biggest dApps in the world. And you can, if you go to like the Arbitrum 1 website, you can take a look at their like dApp Explorer, but they have a super impressive presence in the space. One reason that there's so many dApps using Arbitrum is Arbitrum is largely like EVM compatible, so it's not difficult for smart contract platforms to basically port over to this system. I don't want to say, it's probably misleading to say it's like a one-to-one sort of thing. Maybe there's some cross-transpiler crazy thing going on, but essentially it's easy to move dApps over to Arbitrum, and you can see that kind of through this early adoption here with some of these commonly used dApps. There's also some dApps that have just been built on Arbitrum, which is really cool because you have this idea of like, imagine starting fresh and being like, okay, I don't have to think about the scalability limitations anymore of Ethereum. I can assume a much faster transaction time and lower cost and higher throughput, which is going to give rise to entirely new types of dApps, I think. Just like nobody saw MySpace coming in 1999, there's going to be cool dApps built on rollups that we haven't really thought of yet. What's the UX like? What is it like to use Arbitrum? So I spent some time playing around with Arbitrum based dApps, specifically Uniswap and Curve. Those are kind of the main ones I was playing with. And these are my conclusions. It's super fucking fast and super fucking cheap. So let's quantify that. It really reminded me of playing around on like a side chain, like Gnosis chain or like Polygon. So using Uniswap for instance, just approving a spend of a certain token was within 1 to 2 seconds. Confirming a trade, a swap, was similar, very, very quick. Almost similar to like what you would expect on a centralized exchange, just remarkably quick. In terms of the associated expense, and again, this is just based on some initial playing around, but the fees for a swap or a trade on Uniswap are about like 1/10 of the mainnet. And that's impressive also because, of course, mainnet has a lot more liquidity. But again, it's much cheaper to execute these smart contract sort of executions on a rollup like Arbitrum. And then in terms of on-chain fees, the type of fees that you would expect when using Ethereum, even to send like an ERC20, even in this bear market with gas prices lower, would probably cost you like $4 or $5. But here, so if you look at the block explorer for Arbitrum, it's very similar to Etherscan. You're looking at like maybe 18 cents for deposits and transfers, and even for a more complex smart contract and interaction, like 55 cents, which is this is really impressive stuff. And I have this sense that these numbers will come down more over time. This is just a very early iteration of Arbitrum. In fact, it's still in beta technically. I think other rollups probably have similar. I think this ballpark of fees will be similar, but this will be an interesting point of comparison as we look at different rollups in the coming weeks. So just kind of an interesting question here. Is how does the bridging work? And this actually touches on one of the big limitations of optimistic rollups and one of the relative advantages of ZK rollups. But Arbitrum runs their own bridge. Of course, bridges can be complete disasters if they get hacked or something goes wrong. We've seen that happen many times. The bridge itself kind of runs on their rollup, so it's arguably faster. Again, this is the one that they actually maintain. It's pretty quick. When I started this transaction, it said it would take 10 minutes. I think it only took like 5 minutes. It wasn't bad at all. But there's this kind of big caveat here in terms of, so it's fast to deposit to Arbitrum, but if you want to withdraw your funds back out, it could take like 7 or 8 days. And that might as well be like 80 years in crypto time. Like that just seems insane. So that's for some use cases, maybe that's okay, but that seems like a pretty big limitation, and it is. The good news is there's bridge providers now that I should say like alternate bridge providers that can sort of provide early withdrawal liquidity and let you get around that limitation altogether in a fairly secure way. What seems to be secure so far. So I played around with two examples of this. One is Hop Protocol. You guys may have heard of Hop. They're a really powerful bridge that allows for like swapping between a variety of EVM chains. Pardon me. So I tried the Arbitrum to mainnet bridge, and again, this would take 7 or 8 days if it wasn't for using Hop. They use I believe a type of like AMM sort of thing to incentivize bridge liquidity. But basically, this thing worked within like 3 minutes. My ETH that I sent back out, it popped out on mainnet and all was well. Pretty impressive to see that. And again, a really clever way to just get around those limitations. But Hop is not the only bridge protocol out there. There's like a whole plethora of these guys. I played around with also Across, which is another, I think they're a little bit newer of a bridge, and did the very same thing. Again, within, like 2, 3, 4 minutes, my ETH popped out. There's associated fees to use these bridges, but they're really not too bad. Of course, when ETH mainnet, when prices go back up over there, I should say when gas fees go back up, that side will get more expensive. You can't get around that. But interestingly, Across uses, I think a primitive built by UMA called an optimistic oracle that kind of works in the same way of like optimistic rollups. I'm not too familiar with that tech, but it seems to be using that sort of new smart contract primitive, and it certainly worked pretty well. Of course, the big thing to keep in mind here is like you have to be very cautious with bridges. Things can go wrong. I saw it even last night, like our the bridge over from Gnosis chain, something went wrong there, and it's a shitty feeling to have funds stuck in limbo. So you always want to be very, very cautious of what's happening with bridges. But I think over time it'll be very clear, which one of these bridges is reliable, and we'll probably see 3 to 4 really, at least 3 to 4 getting a lot of market share. So let's kind of wrap it up here. So one idea I had is I was kind of thinking through the implications of all this. And again, we'll get into the other rollups, other flavors of rollups in subsequent weeks here. But there's going to be a wide variety of bridges. There already are, and there's going to be an increasing need to use these. Because again, if my thesis actually holds true, there's going to be a ton more liquidity and users on these bridges. Thus, there's going to be more value going back and forth. And that could be from L1 to L2, but it could also be from L2 to L2. Like, for example, maybe you're on Arbitrum, but over on this, maybe on Optimism, there's a better deal. So you can start to enjoy some of those nice money Lego effects that we're used to on mainnet if you have cool and effective L2 to L2 bridges. And then, of course, just L1 to L2 is useful as well. So kind of the product idea stemming from this is ShapeShift could build a 1-inch of sorts for bridges where we find the cheapest bridge solution for the user and direct them to that in exchange, of course, for maybe from the bridge, we would get a rev share or something. I think that something like that would make sense potentially in the context of our platform. It definitely would be a better UX in terms of taking some of the guesswork away. Of course, again, the security of the bridge and their different trade-offs, how fast are they, are important factors as well. But this is kind of like one thing I don't see a lot of people really like in crypto thinking about like where things are headed so much with respect to these L2s and like what the next step. And like, I think if we focus on this, we could be better positioned potentially. So bridges are outstanding until they get hacked, of course. But bridges also can enjoy the Lindy effect. I think the more money they have going through them, the more they're used, of course, potentially less likely they'll get hacked. I'm just going to wrap up with these caveats here. So I mentioned Arbitrum was in beta. So this is important, and it would be misleading to say like, oh, they have it all figured out and it's really decentralized. So currently it's like a hybrid of centralization and decentralization. Arbitrum, they controlled like they actually control the sequencer, which orders transactions. That is not fully the spirit of, permissionless and trustlessness. It gets tactical here, but like, potentially they could, they can't steal users' money or, double spend or anything like that, but they could potentially order transactions in a way that would be favorable to them. Then you get into the world of like miner extracted value and all that stuff. So, they talk about, they're very open about this on the site. You can also go to, and I would really recommend if you're interested, go to L2Beat and look at the risks tab, and they highlight some of the risks that exist in these implementations, in these earlier implementations of all these rollups, because it's hard to just get off the ground being at your end state. They want it to launch, and it really, I think even in its current state, Arbitrum here is a very good balance of being secure and decentralized, but it's not at its main or its end state yet. And of course, just like any other beta type thing, there's all sorts of bugs. I think Arbitrum actually did have some sort of downtime or issue last week. It didn't completely shit the bed, but it was some sort of issue. Like any new smart contract code, there could be undiscovered bugs. Oh wow! So I see in the chat, Beard actually built a bridge prototype. That's awesome. Yeah, give that a look. That's awesome. It's in Figma. Okay, so that is the presentation. But TLDR guys, like I'm just really super bullish on rollups. This is sort of the outcome of like years of research. Ethereum didn't take the easy way to scaling and be like, okay, we'll just have like, a small number of validators. It's hard to do this, but adoption is happening as we've seen through these charts. And this will lead to some unique sort of UX frictions, such as bridges and maybe fees that ShapeShift could potentially position itself to address. So yeah, thanks for listening. This is one of my passions, and it was cool to share it with you guys. See you on the stage, Willie. What's up?
GM Kent, awesome presentation, dude. I loved it all. Loved the Arbitrum piece and loved the bridge piece and idea for ShapeShift being a bridge aggregator. That mock-up that Beard put together was actually for this Axelar grant that we got, and it's relevant to tokenomics because in a couple of weeks we have the opportunity to present to them along with 14 other grantees in this first cohort. They're going to be selecting 5 of those grantees to receive a follow-up grant of $200,000, 200,000 USDC to continue. And then later, they're going to have a second phase, and they haven't announced the date, but we'll basically have some time to keep building and basically, hopefully, implement Axelar Bridge just as at least the first bridge, because, or who knows, if we can get a bridge done sooner than that, all for that as well. But this is one that we have this opportunity to get some actual stable coins into the treasury in the near term. And I think we have a pretty good chance at competing. From talking to them so far, they're pretty excited that we're actually building this and already have an app with users that would be integrating them into. So yeah, it's one thing that I think we should talk about this week. We have a roadmap discussion with product engineering, and as one of the things that we could potentially focus on in the near term. This does seem like one that's aligned with the roadmap and could also bring in some stable coins into the treasury. And I don't know if I mentioned this part, but of the 5 teams that win the 200K, 2 will be selected for 500K. So there's quite a bit of opportunity here for extending the runway, potentially up to 2 months as we continue optimizing the budgets. Yeah,
that could be a real win-win because it's giving us core competency around this bridge stuff, and also, having some stable income is a nice win. Also, Axelar, so they caught me off guard. They seem to like come out of nowhere. Maybe they weren't on my radar yet, but it's interesting because they aren't just a cross EVM bridge. They aim to be both EVM to EVM, but they incorporate a Cosmos bridging aspect, which to me is like, so they're even arguably more useful than some of these other bridges currently.
Yeah, they're super cool, and they're live in production, and they're actually the main bridge that was adopted by the Osmosis community. So it goes hand in hand with our integration with Osmosis and our focus on our, Ethereum and EVMs and layer 2s, as well as the Cosmos ecosystem and being an interface that supports both. They're similar. Their tech is similar to Thorchain, so they use like multi-party computation, and because of that, they can be chain agnostic and also very decentralized and secure, similar to Thorchain. So bullish on XLR, bullish on integrating more bridges. I'm curious. We only have a little bit of time, but just to the idea around being like a 1-inch, like super similar to 1-inch, and an aggregator that maybe provides this as an API or does this outside of our interface. I'm curious if that is something that we can do. Actually, we got DeFi and Ocean in the audience, or if that is the type of thing that, because we don't have our own backend, would be difficult for us, or would potentially not possible for us to provide as like a service as an API or SDK. Even if we can at least integrate multiple bridges and aggregate multiple bridges into our UI. DeFi says AFK. Sorry for calling on you on the spot, DeFi. Right at 5 p.m. What's up, Ocean? Thanks for joining.
No problem. Can you just restate the first part of the question? I didn't think I got all of it.
Yeah, so would it be technically feasible for us to provide like an API or SDK, just out of curiosity, hypothetically, for something like a bridge aggregator, like a 1-inch 4 bridges? Or is that something that we can't do without a backend? It would just be very difficult.
We would probably need some sort of backend. I would be hesitant to say we couldn't do it, right? There's always options for figuring out a hosting solution, whether it's some arrangement like taxi stake, or if we decide that we want to go that route, I think there's potential for us to figure out how that would work. But in general, yes, you would need some sort of backend for an API to work like that.
Cool. That's what I was wondering. But good to know that nothing's impossible. Yeah, it would be very difficult without a backend. But we could still aggregate multiple bridges into our UI and do routing similar to how we do for the swapper, at least.
Yeah, maybe just the fact that we'd have a lot of different data from different bridges piping in anyway. Perhaps there's a way to present that in a way that's more beneficial for the user, or something. And like one related idea I had was like maybe a dashboard. And again, I think it's not something that's top of mind right now, because this is new technology. But like eventually, users will have their funds distributed on a variety of rollups or different chains everywhere. Of course, right now you have different tokens, and they live natively on different chains. But you can have a dashboard showing okay, you have ETH across, you have ETH on Optimism, a Starkware implementation, and then over on Arbitrum as well. And then maybe within that dashboard, you could have easy ways to like deposit and move funds from one chain to another. Just kind of a nice holistic view of like, where the hell is all my crypto? Because answering that question could get more complicated and confusing as these chains proliferate.
Totally. I do think we're in a great position to aggregate multiple bridges. It goes very much hand in hand with our vision, and the fact that we support so many of these chains and a growing number of chains, not just EVM networks, as well as a lot of different wallets. So I love that vision. And I thought even before at centralized ShapeShift, like, what could it make sense to do? Even try and build a decentralized bridge, and then discover that there are already some teams that were pretty deep into it. And as of course, focus is key. But pretty cool to see a lot of these different options come into fruition. And yeah, totally agree that it's hard. If you've ever tried to go bridge an asset, sometimes it's very difficult to find which bridge to use, and you have to use multiple bridges sometimes. I remember trying to get over to Binance Smart Chain was a total pain.
Oh man, that bridge was crazy. I remember looking at it and thinking, well, this is pretty centralized. But then again, so is Binance Smart Chain. So who cares if it's centralized? Because it's all centralized over there. Wesley Graves, yeah, router protocol. I thanks for sharing that link. I think I saw them pop up a few times. Another bridge solution to look at.
Yeah. Again,
Cool.
to your point about like things being centralized, I think it's for sure worth us thinking about different product lines that maybe have different decentralization requirements, and where we could be flexible with our mandate for decentralization in order to release different offerings, right? Like maybe the ShapeShift app as itself, like we want that to be fully decentralized and not rely on any single backend, but maybe a bridge API, routing API, like maybe we're more comfortable with that being centralized and hosting that as a separate product. And there's still an opportunity to generate revenue with that, and it's you can decouple it further enough so it wouldn't be a risk to the the main front end.
Yeah, that's a great point, Ocean. It's easy. Like I personally make the mistake a lot of times of falling into kind of like the decentralization maxi trap. And, certainly with ShapeShift, with like Fox chain and everything we're trying to do, it's good to work towards that decentralization. But if we could build out like supporting functionality that maybe requires a little bit of like centralized infra, maybe that's okay, for sure. We don't have to be completely maxi with everything, especially if it's adding value for the end user. And ultimately, the bridges themselves, the onus is on them to be secure and maximally decentralized. So in that sense, we would just be kind of like, directing users to these places that each, or these bridges that each have their own trade-offs and risks. But yeah, thanks for bringing up the tech side, guys, because I'm sitting here, I'm just, putting on my brainstorming cap, like, oh, this is so cool where things might be headed, and then just kind of dreaming. But the tech always provides a bit of a reality check.
Yeah, thanks for bringing this up, Kent. Great conversation and great presentation. Love this.
Thanks, Willie. Glad you liked it. Cool. Yeah, we're 5 minutes over. But thanks for listening to me. There's a lot to talk about with just rollups. So I think next I'm going to dig into optimism, which of course is a variant of optimistic rollups. And we haven't even talked about Starkware yet and ZK rollups. And again, these offer some interesting trade-offs versus optimistic rollups. I'm pretty bullish on both, but as we've seen, Arbitrum is getting the lion's share of the action right now. So yeah, that's about it. Psychedelic, yes. Got weed. I guess this would be a logical point to spark a fatty if you've got one. I think I'm gonna get some food myself and not really smoke at the moment, but anyway, guys, thanks for listening. It's always fun, and we'll be back next week. Have a good night. Thank you.